My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one to make friends. Let's try and make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Let me ask you a question. What kind of market shrugs off a massive piece of potentially highly inflationary legislation that is definitively bad news for stocks, while at the same time ignoring, say, a disastrous Tyson Foods quarter and a hideous pre-announcement from NVIDIA? Yet somehow, after all that, we had a pretty sedate day. Dow actually inched up 29 points, S&P shed 0.12%, and the Nasdaq dipped only 0.10%. Congratulations, day! Either the market's lost its mind, or it's so bullish, I almost can't get my head around it. And I've been around for a long time. So why don't we do this? Let's take it apart a little. Let's unpack it, as they say on Wall Street, whatever that means, like a luggage company. Let's start with the Inflation Reduction Act. Inflation Reduction Act. A little hard not to laugh, which is not going to reduce inflation. I'm actually torn here. On the one hand, I'm an environmentalist, so I'm thrilled that we're finally getting big legislation that can curb global warming. As a human who has to live on the planet, good news. On the other hand, my job is to help you to make money in the stock market. And from that perspective, this bill is actually extremely unhelpful. For instance, if you own a drug stock, it's bad news because it allows Medicare to negotiate down some drug prices. Again, that is great from a human perspective. People thought that when I was talking about this today that I wasn't human. But you know what? You don't care about my humanity as much as I'd like you to. You care about my perspective. And from earnings perspective, it's bad. Although, oddly, Bristol-Myers, a company that could be hurt the most, rallied big today. Oh, that's just another example of this market's counterintuitive insanity. There are buyback taxes, too. And you might think that's a good thing, but a tax on buybacks is absolutely negative news for stock prices because it opens the door for higher taxes. Now, I get that there are a lot of reasons why you might support this bill as a voter. But as an investor, I'm sorry, it is suboptimal. I've gotten a lot of pushback these last 48 hours from people who say, you just don't understand. Well, what's there to understand? It's bad for capital and good for the environment. There's nothing wrong with that. But we can't pretend it's not true. Now, long-term, sure, we'll be all better off by stopping climate change. And that is a genuine existential risk. Go ask Larry Fink, who runs BlackRock, the biggest asset aggregator. But short-term, the Inflation Reduction Act is throwing a ton of money at an already overheated economy. And that means the Fed will most likely have to hit the brakes even harder, which, again, what you want is my interpretation of that. If I were Chairman Jay Powell and I saw the strong employment number on Friday and then the surprising bill this weekend, I'd be hard-pressed not to call a special Fed meeting this month to hit us with another 75 basis point rate hike. This bill and the semiconductor bill, which contain another $200 billion worth of non-semiconductor spending, will cause major wage inflation because we simply don't have enough engineers and computer scientists, hey, for that matter, accountants for the IRS in this country. And that's what's called for. And wage inflation, not commodity inflation, is at this point the inflation that the Fed's most worried about because it's so darn sticky. My one hope is it takes years for the spending to hit, which is a real possibility as, of course, our government is, alas, dysfunctional. Okay, enough with the soapbox. I'm over with that. I am out of the closet, liking the bill for the planet, long-term good for stocks, but against the Orwellian rebranding as the Inflation Reduction Act. Did you not find that? Come on. I mean, really, it's the government. I mean, I want you to make money in the market. I don't want you to lose money in it, so I've just told you how I feel. And with that in mind, let's go over to our game plan. Okay, so tomorrow we hear from Emerson Electric. And this is an industrial company that just got a little better today by selling its cyclical InSinkErator business to Whirlpool. InSinkErator makes garbage disposals. I love mine. Don't put your hands in it for homes. And Emerson doesn't need home exposure, even as Whirlpool's always all in on housing. Both stocks got hit, but I think it portends a stronger Emerson down the road. Let's hear what they say about it near term. But I am on the lookout to put this name in my charitable trust portfolio. Now, Ralph Lauren reports, too, and apparel's been a disaster lately. Can RL buck the trend? High-end operation. But right now, apparel's in such a glut that it could spill over to every channel, even the high-end. That's how bad it is. After the close, we have a huge winner from the Inflation Reduction Act. That's a company called Plug Power. We've had them on many times because the bill supports cheaper hydrogen. And that's what Plug Power needs to be more than just a niche fuel cell producer. It was very important for Plug. That said, Plug has not done well on earnings day. So you need to be able to think about that before you pull the trigger. We also hear from Unity, letter U, a software company that helps video game developers. And we know from NVIDIA's pre-announcement today, more on that later, that gaming is weak. So this beaten down stock might get hit even harder. And by the way, Take-Two after the close is very weak. So we don't want to be in letter U. Now, the one sector of tech that's proven pretty much immune to swings in the broader economy is cybersecurity, which means we should get good numbers from CyberArk when it reports Wednesday. We have Cloudflare later in the show. They're going to tell a good story. Now, these guys, CyberArk, their security focuses on the so-called privileged accounts, which is the top level in each company, and it's often considered best in show. We also get results from Wendy's. Now, of course, I used to talk about my wife and a particular kind of sandwich they make. I'm out of that game. I'm concerned that most of the quick-serve restaurant chains can't hold their gains because of inflation woes. I want you to be careful. As much as I think it's great, and my wife loves... Wednesday morning, we also get the incredibly important consumer price index. I expect it to be red hot, offering more ammo to the Fed for aggressive rate hikes. Will they wait until September because there is no August meeting? Depends on how hot this number is, along with the producer price index on Thursday. I actually think the latter number will be cooler, but it may not matter because the Fed's really concerned about wage inflation, and the CPI is what fuels that. I even want to put in front of you that if both numbers are scorchers, we will get a surprise August meeting. Although it won't be a surprise because I just told you. And a big rate hike. Why wait if I were the Fed? I wouldn't wait. Now, here's one that I'm itching to be good, but that may not be enough. It's the Walt Disney Company. This stock has been bouncing around like after a hideous Space Mountain-like ride down without the up. It shocks me that this thing now trades like a streaming stock, meaning a stock that only seems to go down like Netflix. Incredible, because before that, it traded on ESPN subscriptions, which are also down. I don't get it. Why is Disney always being pigeonholed as some sort of subscription company? Here's a company with amazing brands, huge theme park revenues, and the best library of any entertainment company in the world, yet it languishes. Disney needs a better balance sheet for certain, but cash can and will build. We own it for the Charitable Trust, which you can follow by joining the CNBC Investing Club. It's just too hated for me to believe it can stay down. Let's see what they say after the close on Wednesday, but I bet we will like what we hear. Hey, can Dutch Bros, yeah, the legendary Bros, can they recover from its terrible miss last time? Its stock sure has. I think it's a beloved brand, but that can only get you so far. I'm rooting for them because I love going there with my daughter when she lived in Oregon, and we used to get a couple of annihilators. All right, not a great reason to buy the stock, though. We'll see if Wednesday's earnings can change the narrative. Meantime, the stock bounced back terrifically. Oh, boy, talk about bounce back. This is what they need at Warby Parker. The airport, this maker of glasses has just been hammered, like so many other IPOs from the class of 2021. But I wonder if it won't go higher, given that so many of its compadres have finally started turning around. By the way, I'm talking about the stock, not the company. Like so many others, Warby Parker's stock took off because it had a great brand when it came public. Then when we saw the results, people dumped it like there's no tomorrow. Now tomorrow's here. And I bet, like other recent IPOs, it's going to move up on the quarter because there's a gigantic short squeeze going on in a lot of the Russell 2000 stocks. So many new issues have had this trajectory, which is, I can't really write on this. It's not what we call a telestrator in the business, but I'm just going to do the dramatization. Like when my kids were 5, it goes like that and then goes like that. How's that? Now, we also have Toast. Now, the restaurant point-of-sale technology, it's amazing to me how so many of these small companies are now seeing their stocks go higher, even as nothing good is happening. Maybe they never should have gone down so much to begin with. You know what? Even the same thing can be said about Rivian, the electric vehicle maker with a stock that's been rebounding like crazy, too. This one will benefit from the Inflation Reduction Act because there are huge vehicle subsidies, electric vehicle subsidies in it. Now, I do prefer Tesla. We're going to be talking to Oshkosh later. They're benefiting, too, but there does not have the earnings profile that a Tesla has. Finally, on Friday, we have the University of Michigan Sentiment Indicator. Now, I typically don't put this consumer sentiment indicator in this, but you know what? Sentiment's been so abysmal of late that it's affecting the market. And I have to know, when will people start feeling better about things? I care because almost everyone who comes on air has a world-weary tone, and I think it accurately reflects the bizarre nature of an economy with the lowest unemployment and the highest inflation in decades. So here's the bottom line. Don't forget, despite all these earnings, the Fed is still in charge of this market. A week ago, it looked like they might ease up. But after Friday's red-hot jobs number and the passage of the IRA, I'm worried they might lower the boom on us even before September comes. Let's take calls. Let's go to Mark in Florida. Mark.
Hi there, Jim. It's great to speak with you.
Oh, same, Mark. Thank you.
I enjoyed the monthly meeting very much last week.
Oh, thank you. It's been a tough time. We're staying
Yeah,
together.
I know.
All right, thank you. Thank you very much. I'm glad. And that call is still available. And it was fun. How can I help?
My question is about Lockheed Martin. There have been a few ratings downgrades and some insider selling, but Finland and Norway are buying their helicopters, and their missiles are being sent to the Ukraine and used for the Space Force. Is this a buy, sell, or hold at this level?
I am with you. I think it's a buy. They have the best. James Takelett is the CEO. We've liked him before at AMT, right, at American Tower, and we like him at Lockheed. He is bankable. I say buy, buy, buy. All right, the Fed is still in charge of this market. A week ago, it looked like they might ease up. But after Friday's red-hot jobs number and the passage of the IRA this weekend, well, at least as far as getting into the House, I'm worried they might lower the boom on us, and maybe before a September meeting. Oh, one minute tonight. From fire trucks to tactical vehicles, Oshkosh is behind some of the world's most complex vehicles. I'm sitting down with the company's CEO and getting a first-hand look at some of the amazing innovation. You're going to love it. Then there are a handful of stocks that worked in the midst of COVID and still have staying power, but there are not that many of them. I'll reveal which names you should continue to watch. And on Friday, Cloudflare reported just a barn burner. One of the best numbers I've seen, and it had its best day since being listed on the New York Stock Exchange, where we are right now. I'm checking in with the company's top brass to learn more about what went right this quarter. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.